Are you sick and tired of watching your hard-earned money dwindle away because your traditional bank is nickeling and diming you to death? You look at your statement and you see a $12 monthly maintenance fee, a $35 overdraft fee because you miscalculated by 2 cents, or a fee just because your balance dropped below some arbitrary minimum. It makes you angry, doesn't it? And it should. You are at a stage in your life, whether you are retired or just milestones away from it, where every single dollar counts. Your money needs to be protected, not pillaged by big banks. So you start looking around, and you keep hearing about this thing called Chime. Your kids are talking about it, your friends are talking about it, you see the commercials on television. It claims to be a checking account with no monthly fees, no minimum balance requirements, and no overdraft fees. It sounds like financial heaven, doesn't it? But then, the fear creeps in. You think, wait a minute. There are no physical branches? I can't walk in and look a teller in the eye. Where is my money actually going? Is this a scam? Am I going to lose everything I've spent 40 years saving because I trusted some internet app? Let's clear the air right now because your financial security is non-negotiable. First, you need to understand exactly what Chime is and what it is not. Chime is not actually a bank. Let me repeat that. Chime is a financial technology company. Now, do not let that technical jargon scare you. What it means is that Chime handles the app, the website, and the customer service, but they partner with real, traditional, brick-and-mortar banks, specifically the Bancorp Bank or Stride Bank. Why does that matter to you? It matters because your money is fully FDIC insured up to $250,000. If Chime goes under tomorrow, your money is protected by the United States government, just like it is at Chase or Bank of America. It is safe. Breathe a sigh of relief on that one. But let's talk about how it actually works for someone in retirement, because this is where the rubber meets the road. The biggest sell of the Chime checking account is the zero-fee structure. They do not charge a monthly service fee. They do not require you to keep $1,000 in there just to keep the account open. And they have a feature called SpotMe, which allows you to overdraw your account by up to $200 on debit card purchases without charging you a single dime in fees. If your Social Security check hasn't hit yet, but you need to buy $70 worth of groceries, Chime covers it, and they take it out of your next deposit. No $35 penalty. That is a massive blessing for anyone living on a fixed income. Another feature you will hear a lot about is getting paid up to 2 days early. If you set up your direct deposit for your pension or your Social Security check through Chime, they often release those funds to you 2 days faster than a traditional bank would. Why? Because traditional banks hold onto your money for a couple of days to earn interest on it themselves before giving it to you. Chime doesn't do that. Now, this all sounds beautiful, doesn't it? No fees, early money, government insurance. But you know me, I am not here to sell you a fairy tale. We have to look at the downsides, because for a retiree, the downsides of Chime could be an absolute deal breaker. The most obvious problem is the complete lack of physical branches. If you are someone who likes to walk into a building, hand a paper check to a friendly human being, get a paper receipt, and chat about the weather, Chime is going to frustrate you. Everything happens on your smartphone or your computer. If you have an issue, you cannot drive down the street to demand answers. You have to call their customer support or chat with them through the app. If you are not comfortable managing your entire financial life on a screen, do not open this account. It will cause you anxiety, and no amount of saved fees is worth your peace of mind. The second major hurdle is dealing with cash and paper checks. Let's say you sell an old lawnmower for $300 cash, or your grandchild gives you a $100 bill for your birthday. How do you get that money into your Chime account? You can't just slide it into an ATM. You have to go to a retail store, like Walgreens, CVS, or 7-Eleven, and ask the cashier to deposit the cash onto your Chime card. Now, Walgreens happens to be free, but other stores will charge you a fee of up to close to $5 just to put your own cash into your account. Furthermore, what if someone writes you a physical check? You have to take a picture of it using the Chime app on your phone to deposit it. So, what is the bottom line here? Is the Chime checking account right for you? It is the right move if you are highly tech-savvy, comfortable doing everything on your phone, and completely fed up with traditional banking fees. If your primary income is a direct deposit from Social Security or a pension, and you want that money 2 days early without worrying about minimum balances, Chime is a phenomenal, Safe, secure tool that will save you hundreds of dollars a year. But if you still use paper checks regularly, if you frequently handle physical cash, if you want a joint account with your spouse, or if you simply find comfort in knowing there is a brick-and-mortar building down the street with a vault and a human manager you can talk to, then stay away. Stick with a traditional bank or, better yet, look into a local credit union, which often offers the low fees of an online bank but keeps the physical, human touch you deserve. Your actionable takeaway today is to look at your last 3 bank statements. Add up every single fee you were charged: maintenance fees, ATM fees, overdraft fees. If that number makes your stomach drop and you are comfortable using an app, open a Chime account with a small amount of money first. Test the waters. See if you like the app before you move your entire direct deposit over. Be smart with your money, protect your hard-earned savings, and never, ever let a financial institution take advantage of you.